FA1 Part B. Recording and Accounting for Cash Transactions. Chapter 11. Bank Reconciliations. The topics that this presentation will cover are 1. Bank reconciliations. 2. The bank statement. 3. Procedures for performing a bank reconciliation. 4. Reconciliations on a computerized system. 1. A bank reconciliation is a comparison of the bank balances in the books of the business and the bank balances in the bank statement. The differences between the two bank balances are caused by one or all of the following: an error in either the bank statement or in the books of the business, any bank charges or interest that is charged by the bank, which are not yet recorded in the books by the business, timing differences which are caused when a check or payment is made out or received and recorded in the business's books, but it has not yet cleared in the bank. When doing a bank reconciliation, you need to be certain of the following: that all transactions have been correctly treated by the business and the bank, and that checks are not written when there are insufficient funds in the bank account, because a receipt has not yet cleared at the bank. 2. These are the items you will find in a bank statement: the balance of the bank account, as at the beginning of the month, any new debts that have been incurred during the month, any payments that have been made during the month, and the balance of the bank account, as at the end of the month. When a customer has money in a bank account, the bank owes him money, and the customer becomes the bank's account payable creditor. For an example of a bank statement, and the explanation of the different parts of the bank statement, see page 234 and 235 of your interactive text study guide. Stop the lecture. Answer the question on page 235 and 236 of your interactive text study guide. 3. This is the procedure to follow when performing a bank reconciliation. Step 1. Identify the cash book balance and the bank balance from the bank statement on the date to which you want to reconcile. Step 2. Add up the cash book and identify and note any errors that are found. Step 3. Examine the bank statement and identify any items that appear on the bank statement but do not appear in the cash book. Step 4. Identify all reconciling items that are due to timing differences. For example, checks that were recorded in the cash book but have not yet cleared at the bank. Adjusted cash book balance. The cash book balance brought down, plus any corrections of an understatement, and any receipts not yet entered in the cash book, less any correction of an overstatement, and any payment or charges not yet entered in the cash book, equals the corrected cash book balance. The bank reconciliation. The balance as per the bank statement, plus any checks paid in and recorded in the cash book, but not yet in the bank, outstanding lodgements, less any checks paid by the company, but not yet cleared by the bank, unpresented checks, equals the balance as per the cash book. Stop the lecture. Answer question on page 239 of your interactive text study guide. When, and how often, a business does a bank reconciliation, depends on a few factors. Frequency and volume of transactions. The more transactions that occur within a business, the greater the chance of errors. Other controls. If there are only a few checks, done on cash, other than the bank reconciliation, then a bank reconciliation needs to be done very often. Cash flow. If the company keeps a close watch on its cash position, then the bank reconciliation needs to be done as often as information on the cash balance is needed. The number of bank accounts. If the company has several bank accounts and all the bank accounts are used regularly, it may be impractical or impossible to perform bank reconciliations often. Stop the lecture. Answer the questions on pages 240, 241 and 242 of your interactive text study guide. 4. In essence, there is no difference between a bank reconciliation done in a manual cash book and a bank reconciliation done in a computerized cash book. In a computerized cash book, there are program controls to prevent and detect many errors that might occur. For these errors and how a computer program might detect them and deal with them, see the table on page 243 of your interactive study guide. This is the end of Chapter 11. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part B, Chapter 11. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What are the 3 main reasons why a business's cash book balance might differ from the balance on a bank statement? Question 2. What is a bank reconciliation? Question 3. What is a bank statement? Question 4. Why are check numbers shown on the bank statement? Question 5. What are the 2 parts of a bank reconciliation statement? After doing the quick quiz, do the online questions for Part B, Chapter 11. Do the questions, until you achieve 80%. Replay the lecture as needed.